Hey everyone, John with Dad's Options. Welcome back to Portfolio Update number 6. Today's September 19th, 2020. If you're new to the channel, welcome. Here's a quick little rundown of what we got going on here. Back in July, I set aside $25,000 into a separate portfolio. I wanted to bring all of you along on a journey to grow that account by mechanically trading options. I'm now gonna go through the portfolio. I'm gonna show you all the new positions we put on, any positions we've closed, and any adjustments we made. I wanna focus on two positions, Apple and Tesla. Tesla I still have on in the portfolio and Apple came off, but it's an interesting trade because it showed that even though you could have a losing trade for most of the life cycle of a trade, you can end up taking it off for a scratch or a small winner. Please feel free to like and subscribe to the channel if you like these portfolio updates. Leave comments down in the comments section if you'd like to see something new. All right, so let's get right into the portfolio update. All right, starting off with our buying power effect, we're at $5,518 of capital deployed. That's about 22% of our overall portfolio value. Again, on the low side, want to be at 50%, but with the upcoming election and the fact that we're in between expiration cycles right now, it's been hard to put on enough positions, but we'll get there. And you see our option buying power is $19,264. Want to be at $12,500 of available option buying power if we're at that 50%. So our delta is a positive 5. Our theta is 31. Our extrinsic value is 1,244. And our equities pop, again, excluding the 3 futures position, is at 50%. Going into our trades that we made since our previous update on 9/16, you see here Chewy, the small dollar futures, and the micro. We talked about these in the previous update. Number 5, you can click on the link in the description to find that video. I will start here at IWM because that got filled later in the day after the update had already been recorded. So what I was able to do with the IWM, the overall position is a broken wing butterfly. I was able to roll up the 137 put up to the 140 put. And basically that took off all the risk I had on the trade. Did it for 28-cent debit. The overall credit received originally was 32 cents, so I will cover my commissions on this trade if nothing else. The next position is Apple. Apple closed for 50-cent debit. This trade was one of the first trades I put on in the $25,000 portfolio. It dates back to 8/4 was the opening trade date. Again, it's pre-split. I did that for a credit of $2.05. And as you can see here, let's go over to August 4th. You can see Apple was at all-time highs at this point. It was, on a tear up, so I thought, it would be a good time to sell a call spread. And then you can see from that point on, it just did nothing but rally all the way up. Yeah, so from the onset, this position was just a loser, and I was, just kind of figuring that it was going to be, a full loser. And since it was a defined risk trade, I was not happy about it, but I was okay with it. The next position here is the Micro ES Iron Condor. If you saw my last video, I put this position on here. I actually did the calculation wrong when I put it on. This is kind of one of the downsides to these micro or even the ES options is there's multipliers, and I've thought that I was collecting 1/3 the width of the strikes when I put this position on, and in fact I was actually not. I was much lower. So as I said in my previous portfolio update number 5, I was going to go ahead and close this because, staying mechanical, it didn't fit my parameters. I didn't like the trade. You know what? So instead of keeping a trade on that I don't like, that I didn't like the setup when I understood really, what I had on, I just went ahead and closed it. I think, this isn't a $1.50 loss here. It ended up being, much smaller than that. I think I lost like $28, including commissions and all that. So, again, that's, a lesson I learned here is, really, really focus on what you have on or what you're putting on in these micro or even ES options, just because it's, the multipliers are hard, to really see the width of the strikes, what credit you're going to collect for that. And so just be careful, paid $28 tuition there to learn a lesson. So the next position I put on was just in the ES futures options. And again, when I went back and I looked at, the volume and the liquidity of these micro options, since they are new, it wasn't as good as the ES option. So I just went ahead and said, you know what, I'll put a position on in here. You see the 41 days to expiration. That's the primary reason why I was in this, why I am in the ES options to begin with, because we're in between the other cycle. I wanted to put on some more trades, and so 41 days to expiration is a lot closer than the October cycle, which I think is like 28 days yesterday on Friday. So this fit the parameters a little better. This is not a closing trade for a quick winner there. This is actually a broken wing butterfly on the Tastyworks platform. You can't put the broken wing butterflies on as one trade in the futures products. And I don't know if they're working on that functionality or not, but you have to leg into this. So basically this is routed as a long put spread, the 310, a short put spread, the 3110, 3090 short put spread, and a long 3120, 3110 put spread. So you're basically just putting on two individual put spreads and routing those as two separate orders. The credit I collected on this, the difference between these two are $1.50. However, the ES options have a multiplier of 0.5, so just multiply everything by, it's actually a multiplier of 50, but when you're trying to figure out what credit or debit you're paying or collecting, you have to multiply that by 0.5. So in my case, it was $1.50 credit, so I multiplied that by 50 and I got 0.75 or a $75 credit to put this trade on. Again, at this point, I'm going to treat it like any other broken wing butterfly. If I can roll up, the farthest out of the money put, which is the 3090 put, if I can roll this up to the 3100 put for anything less than a 75-cent debit, I will look to do that and take all the risk off the table. Now, I shouldn't say I do this every time. There's instances where I don't, and I just am happy to collect the credit, but there's very few instances where taking risk off the table is a bad thing. So I look to do it if I can, and the environment we're in, really, some of these broken wing butterflies really set up nicely. So you've seen the portfolio kind of heavily weighted in that. So going back, just kind of looking at our 21 positions here, I still maintain my directional bias in the technology sector. I still think it's obviously closer to all-time highs, and so I'm going to keep my sticks on. I'm still long dollar, so I'm going to keep that position on. CRBP, we're going to just continue to talk about this problem child. It's really, a defined risk trade because it's only a $1.90 stock. And so if it goes to zero, files for bankruptcy or whatever, I'm only out a maximum $500. And again, that 1 to 2% of my overall portfolio value, that, this trade still fits in that, even though it's an undefined risk trade. So we'll look, next week to roll this thing maybe, or, leave a comment in the comment section of this video and let me know what you think I should do with CRBP. Next position I want to talk about is Tesla. Tesla is crazy, and we are now above our put side broken wing butterfly, and I am showing a $2 debit here. I think that's probably pretty accurate pricing. The problem with this position, and the reason why I haven't been able to roll off all the risk, is because of this right here. Volatility has really expanded in Tesla. Option that I'm trying to sell and then buy another one closer to the money has expanded too high, and therefore I cannot close that position for a small enough debit that will cover my costs. So if you go here, you can see it's still a $2 debit, and that's just to roll the 415 put up to the 420 put. So only going $5, and the stock's way up here at 442. You would think I'd be able to do that, but the volatility just has really kind of expanded here on me, and I haven't been able to do that roll and take off all the risk in Tesla. The last position, VXX. This position, I just want to kind of talk. This one was a hedge position. It's approaching. I've lost about half of the debit I've paid, and so I can only get back $118 of this. Again, I'm fine with leaving this position on as just my overall market hedge. This in conjunction with my sticks position and my long dollar, I feel like that's a good core position to hold. If we do get more sell-off in the market, VXX will only really become profitable if there is a corresponding volatility increase in the market, and a lot of my short premium positions will be impacted by that. But hopefully the VIX will help offset some of that Vega risk there, and we can be protected from that aggressive downside move. All right, so that's the update for today. Now, I wish I had some better news, but the portfolio net lick is $24,767. That's down $138 since our update on 9/16, and that's down $233 since our portfolio inception of $25,000 back in July. Now, there is something to learn from this. It's not always going to be an up day. You're not always going to make money, and your portfolio isn't always going to do what you want it to do. We had some long deltas, therefore the market sold off the past couple days, and naturally we're going to lose a little bit of money. A lot of our winners came off the board, as you saw in the update back on 9/16. These are the times when you really just need to understand that your portfolio is going to fluctuate. You're going to have some losing days, and you just need to stay mechanical and stay the course. With 21 positions on, we really want to get that number up and put on some more positions. That'll help our P&L. I really appreciate all you guys. Like the video, subscribe if you want to see more videos. Next week is roll week. We're going to have some big decisions to make regarding the portfolio. One, do we roll all of our existing 21 positions that have not reached 50% max profit? Or do we take those positions off due to the upcoming election? The next cycle will be the election cycle, and so we have to really weigh the benefits of these existing positions and if they fit into our overall market assumptions. I'd like to get your guys' input on what we should do next week, so leave some comments down in the comment section. Let's turn this into a little bit more interactive and see if you guys can help me make these decisions with the portfolio. If you want to see some of these trades broken down a little more in depth, you can go to dadsoptions.com and click on the trade blog. All right, so that's it. Thank you guys for tuning in. Have a good rest of your weekend. Stay safe out there, and happy trading.